All right, okay. Episode 14, the one that you guys have been waiting for, literally the entire strategy from top to bottom, giving you hopefully all the sauce that you need to be able to take good trades with the strategy. And I'm going to walk you through maybe a couple of my winning days that I had in the past couple of weeks and show you exactly what those look like on the strategy that I actually trade. So if I head over to TradingView, you can see that I have created a full step-by-step guide on what exactly we are looking for in the entire trading process for what I'm looking for. So first things first, what am I looking for? Well, in the first couple episodes, we were looking at the draws on liquidity. So what did I say that the highest confluence draws are? We have 4 hour, 1 hour, 4 hour, or the 1 hour, or session highs and lows to be swept. And then after that, I'm looking for a break of structure or a inverse fair value gap. Remember how we talked about those. If you don't know what I'm talking about on these charts, you need to go back and watch the other videos. But 5 minute break of structure or inverse fair value gap in the opposite direction of the liquidity sweep. So if we have a draw right here, and then we come down and sweep out this 1 hour, 4 hour, or session high and low, and we sweep this out, I'm looking for a 5 minute break of structure to the upside or a inverse fair value gap to get inversed. So I would be looking for either of those things to start us off. We inverse a fair value gap, or we have a break of structure, or we have both, which is ideal for a plus trade. So we can identify how good a setup is really based off of how many confluences they have really that fit our strategy. So once we have that, I would be looking for a fair value gap that would be formed on this leg up. So if this is the move upwards, hopefully we have a couple of 5 minute candles in here and we either make a fair value gap in here, or we come down and we retrace into equilibrium, which we would draw out, and it would look something like this. So we'd come back down into equilibrium and maybe a fair value gap, and we would stay inside the fair value gap and then get reactions to the upside. So we'd come back down into this fair value gap, hopefully get reactions to the upside. And when we are looking for this 5 minute fair value gap or equilibrium to get broken into, we would scale down to the 1 minute time frame, and we would probably see that the 1 minute time frame would break structure whilst the 5 minute time frame is staying in a bullish uptrend in the current space. So it would probably have like a low down here, or it would have the 5 minute low down here. But if we scale down to the 1 minute time frame, we might have a low up here that was broken structure, and then we move down into this fair value gap down here. So we would want this gap to get respected and move to the upside, but we confirm the 5 minutes like retrace. Basically, this is our retrace confluence by getting a 1 minute break of structure back to the downside. So that's just the final fake out before we actually give our 1 minute time frame confluence back to the upside, and that would be our entry. So as soon as I'm seeing this, I'm seeing we come up, we break structure, and then we end up coming back down and retracing into a gap or equilibrium or both. Then I would be sitting down on the 1 minute time frame. As soon as we come down into this gap on the 5 minute and we look on the 1 minute, okay, we've broken structure back to the downside. I'm sitting on the 1 minute time frame and I'm waiting for us to break back up to the upside. So on the 1 minute time frame, I'd be looking at the most recent high and I'd be waiting for us to break structure back to the upside. You guys might be saying, this strategy's already been taught on YouTube, whatever else, but it's the strategy that I've stuck with for almost 2 years. So I'm going to teach it in my own way, and hopefully you guys can maybe understand my videos as well, and hopefully you maybe understand me a bit better, or I don't know. It's whoever you prefer to watch, really. So if you're here watching this video, I appreciate it, but you can find this strategy. You can find 100 different strategies online. I just want to preface this beforehand. Every single strategy that you can find out there will work. It's just that you need to put in the time and effort to be able to make it work. So if you see something like a uh, support and resistance trader, I feel like that doesn't make any sense in my own head. I don't know how to trade that, but I'm going to tell you guys how I know how to trade and how I see the markets in my own way. So this is how I understand it. This is how it makes sense to me, anyways. But you guys might have a different opinion. It's perfectly okay. Just know that whoever you learn your strategy from is going to be uh, worth it, and it will actually work out. But you are the one that proves that it works, or you are the one that will continue to not make it work in your own favor. So just getting that out of the way, we can go back into here. We can see that through this amazing drawing that I've drawn, once we get this 1 minute time frame, breakup structure or inverse fair value gap to the upside, then we would enter the trade. And in this current situation, we would put our stop loss underneath the two most recent lows. So let's say that there was another low over here. We'd want to put our stop loss for this long position underneath not just one, but then the second low. And sometimes this won't be the best case, but I can show you guys examples of that. And then what would we target? We target, let's say we have a hourly or 4-hour draw up here, maybe to the upside over here we have some more draws. We can put our targets up to there. So these would be good targets in the other direction to look to exit the trade at. So once these higher time frame draws get hit to the upside, then it is a good idea for us to look to exit. So hopefully that was a good explanation, and I can get into showing you guys on the charts just at the moment. So let me get a day set up where this this should look okay, and I should be able to show you guys good examples and how my mind runs through the day as we're looking at the charts. All right, okay, if we look at this day that we have right here, this looks like a perfect day where we can analyze our bias. Okay, so what am I doing? The first thing that I log on to the charts in the morning, I am going up to the 4-hour time frame because we are trying to take a day trade. We're trying to trade in between the current day and find a trade within that. So I'm going to mark out all of the realistic draws that price could come up and hit. So we have these all-time highs right up here on the 4-hour, and then we can see that just by analyzing the 4-hour and seeing where we're headed at the moment, we can see that this draw was already taken and it was already candle closed above. So we know that the 4-hour time frame right now is currently bullish. So we broke structure on this candle right up here on this high to the upside. We broke back from being in a bearish trend over this way, and we broke back into being in a uptrend. And what do we also see? We also see that we have a couple of fair value gaps that the market is currently tapping into and could possibly respect. And we see that if we take equilibrium of this entire range right here, we haven't quite come down and hit it, but maybe on the S&P we have. So I'm going to mark out these two. These look like the most realistic draws that price could come down and hit. And I'm going to hit shift and I'm going to click, and I can see that, what did we talk about in our previous video, that the market's probably not going to move about 2% in an entire day just to, move to the downside when it's already down 0.55% for the day. So we're probably not going to move down that far. And this is kind of realistic that we can move up to this high up here, but, we're just going to mark those two out. And then I'm going to drop it down to the 1-hour time frame. I'm going to see if there's any highs or lows that we have not hit yet, which indeed we haven't. We haven't hit that one. We haven't hit this to the upside. So it's already looking pretty decent to the upside. It's looking very good. We don't have many draws to the downside. Maybe we could come down and take out these Asian session lows and then get a reaction to the upside. But we have a lot of stacked highs up here. So my brain's already turning and it's going, I'm thinking we should be bullish for the day. It should be a decent feat for us to take it along. And we can go to the 4-hour on the S&P 500, and we will mark out all the highs that have not been taken yet. Let's mark out this. Was this equal highs with this? Yeah. So it's equal highs with Asian highs. We have no fair value gaps that we're coming down to fill, but we can see that same story. We are bullish on the 4-hour, moving upwards, and we are retracing here. Maybe down into equilibrium. Equilibrium is just underneath Asian session low, so we could definitely come down and hit that. And there's also this fair value gap that we could come down and hit too. So maybe we'll come down, hit this Asian session low, and then look for that to be our liquidity sweep for step one. Because what are we looking for? We're looking for a liquidity sweep, break of structure, and then fair value gap or equilibrium to get filled. I think I deleted it. Yep, well, I deleted it, so I'll have to retype it out or just go over each one as we see them. So we're coming into 9:30. Let's play out the market a little bit. Maybe I'll go to ES so I can show you guys. It's probably going to come down to this Asian session low. Yep, we hit that Asian session low. And then what am I looking for from here? If we're looking at our steps box, let me just redraw it out. Okay, I kind of redrew out our box. So what do we see from moving over here to ES? We get a one Asian session sweep of liquidity to the downside. So that is already step one of our plan. And we saw that pre-market swept out London session lows right here. So we have a break of structure down. And then what do we also have as extra confluence? If we're looking at these Asian session lows that are on a actual hourly low, we can see that we are also forming a giant bullish SMT on these indexes. So we see that this one is slanted downwards on ES. This one is to the downside more. So if I was favoring to take a bullish trade, I'd probably be favoring it on the NASDAQ because we are way higher than what we are on the ES. So if we see and we play out market just a little bit more, we can see that we actually come down on NASDAQ and we do create the SMT. Let me take a look here. Okay, so we have not broken structure to the upside on these two indexes just yet. I'm just going to play it out for a moment. Okay, so during this candle right here, I believe, we can see that we are monitoring the highs that get put in. We don't get a break of structure here. Don't get a break of structure here. We get the break of structure, I believe probably right here. That would be the best option to take it from. And then we can look at both of these. Let me just see where a trade might have occurred in this. Okay, we break structure. To the downside, we just need to look for a 1 minute confluence, I believe. Yes, this would be decent. Let me just take a look at this. So we get moves to the downside, moves to the downside. We broke back up here. Then we're looking for breaks of structure back to the downside. Okay, so to get a break of structure back to the downside like this would be something that we would look for. So we monitor the lows of each of these as it's moving. We get a break of structure to the downside right here. That would be our 5 minute retrace that we would be looking for. This day is a little bit more choppy, I believe, to be honest. So I believe that I took a trade based off of the fact that we would break structure onto this candle, I believe, and then we retraced back downwards already. So I think I took a bullish long trade off of this. Let me just see where I took a trade from. Okay, it was a bit harder for me to understand where I took the trade off of this this day, but I can fully understand now why I took it. So if we're looking on the 5 minute time frame right here, it looks a bit choppy, but what I was looking for was for us to break back up to the upside on the 5 minute time frame. But in this case, we had ES being a little bit more bullish than the NASDAQ did, and what we ended up doing was we ended up breaking structure up to the upside on this candle right here. We get a retrace candle to the downside right here. On the next candle, we come back down into equilibrium, and what do we also do? We also come back down and we inverse this fair value gap that we have right here that is to the upside on the 1 minute time frame. So that is our confirmation of the second thing that we need to see when we are taking trades. Let me find this piece, this right here. So we have our 4 hour, 1 hour, or session high / low sweep. And let me just copy this and bring it over here. So we have Asian session low, which gets swept right here. Boom, that is the first part of our confluence filled. What do we get in the second part? We get a 5-minute break of structure. So as this leg is coming up here, we're monitoring these highs. Does it get swept? No. Does it get swept? No. Does it get swept? No. And then finally, boom, we get swept right here on this candle right here. Back up to the upside so we can confirm that we are in a bullish trend again. And then what would we draw? As soon as we start to get a bearish leg here, we would draw from swing high to swing low. So this would be swing high right here down to this swing low of this candle right here. And once this candle forms, we can know that this was a equilibrium tap. And we can confirm that this is our 5-minute break fair value gap or equilibrium, confirmed by 1-minute breakup structure down or inverse fair value gap down to the downside. So we inverse this 1-minute time frame by getting a candlestick closure below the fair value gap line, which is right here. So that gets broken. And then what would I be looking for? We would be looking still on the 1-minute time frame right here for a breakup structure or an inverse fair value gap back up to the upside. So what do we have? We have a fair value gap right here that we can look for a inversion on. So we get that right here on this candle. And then we also get a breakup structure on the next candle, very next candle right here. So we'd have a worse RR if we took that, or if we took this trade, we would have a better RR. But what did I say during the day? I said that we would want to probably take this on NASDAQ. So we are confirming our bias with ES here. And then we'd probably switch back over here to NASDAQ because NASDAQ was the more bullish index and it did not come down here and sweep out these lows. So I'd be more inclined to think that NASDAQ would come up to the highs faster than ES would. But it might not. It might not. I might be wrong in this case. So I'd see that we inversed back up to the upside. This is just lining up the candles from each time frame. So we inverse this fair value gap right here on this candle right here at the same exact time that we did on ES. We inversed it, and then we come back up to the upside. We didn't have a fair value gap on NASDAQ, so you could look on ES for when ES breaks this this fair value gap, and then you could scroll back over to NASDAQ and say, you know, I'm going to take the trade now. I saw it get inversed on ES, so I'm going to take it on NASDAQ. And then what are we going to do based on our little note right here? We're going to enter the trade. We're going to put our stop loss between or below two previous lows. So we have this low right here, and we also have this low right down here. So we'd want to put our stop loss below there, or, you know, we have this third low right here that we could put our stop loss underneath, and then we can target all of these other 4-hour and 1-hour highs that we have at the beginning of the session. So we have 1-hour high, 1-hour high, and a 4-hour high up here. And we also have London session and Asian session highs that we can target. I don't know about Asian session. No, Asian session was already taken out. So we have London session highs that we can target and look for a trade to take to. So we can take it up to there, or, you know, we can look for 5-minute liquidity, but, you know, probably want to be taking a big trade during the day. So we would look for something like this. And then in 5-minute terms, I'd probably be looking for like a 5-minute or a 15-minute place where I could go break even. So, you know, this high looks pretty good. Normally I want to be break evening my trades so I don't get, you know, liquidity swept in another direction, and then it comes back down to haunt me and take me out of the trade. So we can see that this is a really good trade that we have right here, but it is a 1 to 4. So I'm going to speed it up to 5-minute time frame. We can see that throughout the entire session, we move up and we take out every single one of these draws and liquidity. So it was a massive day, massive green day really, for the strategy, and it worked pretty well. You can see that during every single day, pretty much, we will have one of these events happen, one of these trades happen. So broke it down for you guys right there. It was the entire strategy. It was A to B. What I'm looking for 4-hour, 1-hour session highs and lows to be swept. And then we go to a 5-minute breakup structure or an inverse fair value gap in the other direction. We didn't have any fair value gaps, so it was just the 5-minute breakup structure. And then we look for equilibrium or a fair value gap to get filled. In this case, it would be equilibrium. And then we look for a 1 minute, or we'd look for that to be confirmed by a 1 minute break of structure or adverse fair value gap back to the downside, or IFVG, down or up, depending on if it's a bearish trade. And then we'd be looking for a 1 minute break of structure or an inverse fair value gap back up to the upside or downside, opposite direction, whichever side you're going for long. Longs or shorts. And then you're entering, you're putting your stop loss between two of the most previous lows on the 1 minute time frame. So boom, one low, boom, two lows. You can play it safe even if you have like a huge trade like this. Put it under that third low, or you could tighten it up a little bit more and get a even better RR. So 5.2 seems pretty good to me. 5.2. So that is basically the entire gist of how our entire strategy works. And this is just a really good day to show how liquidity was swept. We moved to the upside. We understood the SMT that gave us even more confluence that we were going to go up to the upside. And that helped us select NASDAQ to go to the upside, basically. And we also had ES come up and hit it. ES hit it at around 1222. And, you know, we were lagging behind a little bit on NASDAQ, but, you know, we had more draws up here. So we targeted those and we hit them just a little bit later at about 3:05 or 13:05, which is 1:05 p.m. So not too shabby. This is just a really good show of how you could take a huge banger trade off of this just strategy right here and just notice that, you know, even though we're consolidating a little bit, you can still find our confluences throughout this. So consolidate all the way up until here, and then we get the boost that we need, and then we, you know, start to take off just before that 10:30 time that I'd be stopping to look for no trades. So boom, that should be our entire strategy just broken down of what I'm looking for in the day and how we can identify different draws and take profits that we can target. So boom, peace. We'll see you in the next video for some hopefully more psychology based stuff. So peace.